Hello viewers all over the world. Today on popular demand, we will be bringing to you price actions. Before we proceed, if you are new to the channel, do subscribe and hit the like button and sit back, get a cup of coffee, a popcorn, whatever it is that will keep you relaxed. This is one of the special moments that we will be presenting an all-packed insights into forex trading. We will continue after the short break. Welcome back. As I said, in today's discussion, we'll be looking at price actions. What is price action? As you can see on my screen, this is just nothing but studying and analyzing price movement based on patterns, price movement patterns on a price chart. So if you have been following our video presentations, you would see that everything I'm going to talk about today had come, some of them had come in bits in some of the previous videos. So if you are following the trends, the price action video today is going to put together all those that we have presented in the past, and then you will see how they have come together to come to play and make you make the right market decision when you look at a chart. So without wasting time, okay, this is how it goes. I will make a short terms presentation, then we will go back into the chart towards the end of the day to see how everything we've talked about, how they come together to show us how to enter a market. What we'll look at? We'll look at candlestick patterns. Please refer to the video on candlestick pattern for detailed analysis, support analysis, support and resistance levels, which in other words you can call the demand and supply regions. What is market trend and what are the swing points? So this together is what we will first of all make some brief description of what they are, and just to refresh your memory on the terms. Then we see it in play. With that, not in this order, we'll look at the chart and we'll describe what these are in turns. Going with trends. Trend is the market direction. Trend is the market direction. If you look at this place, we have from up here, we have a lower low. This is a lower high. If you don't understand what it means, lower means lower down, that is down. This is a lower low here. When we say lower high, this is lower high because it is a high after this low but below the first swing point that you started the count. So this is a swing point here. From this point we have a lower low, then it came back to a lower high, another lower low, another lower high, another lower low, lower high, lower low, lower high, lower low, lower high, lower low, but you have a change of character. Okay, here you have a change of character. So follow me patiently, you will understand. Just going back through what I've just said, I explained trend, and in the course of explaining trend, you had the word swing point. Swing point is that point where there is a change in trend. There is a change in trend here. It happens here again. So it's like it's happening here again. And if you go backward, you might see it happening at the same point again. By the way, this is the gold USD, that's XAU USD currency pair. So this is swing point, this is trends. Now what else have we? Candlestick patterns. Patterns are shapes. Candlestick shapes, that is when candlesticks come together, what shape does it form? When you hear patterns, we are referring to shapes. Okay, let me explain that because I could see something that resemble one here. Usually, we look out for candlestick patterns at the termination of a trend. When when a trend is about to change, you look for a candlestick pattern. Okay, that will signify to you that this is the end of a trend. Now, the candlestick pattern here, I could see something. There is some we call the flag pattern. As I said, if you had not, if you go back into our channel, search for candlestick patterns, you will see where we have explained in details what these are. Okay, here in this, anyone I identify here, I will just tell you straight what it is. I spot a flag pattern here. Joining this, okay. Even before I complete this, you could see it's already forming a flag. What else do I need to put here is the pole of the flag, right? And this is the pole of the flag. So you see here that in an uptrend, you have this pattern form. You had a flag pattern form here. So also, what can I spot another pattern here? Yes, there's another pattern here we call the wedge pattern. Let me see if I can pull it out for us. If you see here, yeah, this is a wedge pattern. Sorry, I want to make the pole of the wedge. So again, you see a wedge pattern here. So after this, what usually happens is that at the end of a pattern, there is usually a breakout. At the end of a pattern, there is usually a breakout. So here, if you see this, after this flag pattern, there was a break downward here. Here, after the end of this wedge pattern, there is a break upward. So to analyze this, to analyze the what does the flags, what they indicate, please refer back to our our previous videos on flag patterns. If you go back again, you can easily place them. I see something resembling a wedge also played out here. Okay, here you see a flag. If you consider this the pole, and again, sometimes when it's not too clear for you what you need to do, you can go to either a higher time frame or you switch to a lower time frame for you to see clearly what the pattern is all about. Okay, so now we talk about the support and resistance level, or the demand and supply region. From basic economics, when we say demand, this is when there is a demand for a product, right? People come into the market, they want to buy more. And when there is a supply is where the sellers of those commodity are able and willing to fulfill the demand of the people requesting to buy, and then we have equilibrium of demand and supply and something like that. So here in this context, when we say demand and supply, demand simply means, in this case, intent to buy or willingness to buy. Fulfilling demand, that's the right word. Fulfilling demand and fulfilling supply. That is how we will look at it here, because to fulfill a supply is that the seller has what you want to buy and is able to deliver that. But in price chart, how does this look like? So when there is a supply is when you see the currency pair going down, going the downtrend. Okay, from here I could say there is a supply here. There is a supply here. So sellers are into the market, and then the market go in the down trend. Also the reverse is that of the demand. When there is a buy, then you see the market moving in the upper trend. So these are the four terms that I said I would explain first. Then moving on next is actually what are those guiding rules that would help us put price action to our advantage. Okay, what are those guiding rules that will help us put price action to our advantage? If you go back to what I said first, I said it's just nothing but studying and analyzing price movement and patterns on a price chart. Okay, and I have gone through just a brief one. I have gone through identifying what are chart patterns, what is trend. What I need to explain now is the demand, the support and resistance levels. Yes, support and resistance level. I did not go into details of that yet. The support and resistance level, as I said, is the demand and supply, though I explained that, but I need to show you on the chart how we can mark out these zones. To show you that, I have to go through my rules. That's the rules I marked down here. Trading rules, for these are basic things. Put this at the back of your hand. Anytime you want to enter a trade, go through these rules again, just to refresh your memory so that you don't make wrong decisions. Trading rules, that is where you determine clearly. You should know your entry and exit rules, and then you also know your profit and stop loss targets. Okay, there you should have discipline. Don't force the market. If this rule number one is not satisfied, if your rule number one is not clearly satisfied, do not force the market. Don't assume. Don't assume with your hard-earned money, else you will lose it. Then it is also linked to your risk management. Stake only what you can afford to lose. This sounds very easy, but it's usually very difficult, especially for beginner traders. You will hear people in forex trading, people invest $100, they make $1 million, all these junks. Man, forex trading is not gambling. If someone, yes, it's possible you go in with $100 only. At the end of the day, you become a millionaire. That is, you have dollars. You have make hundred and thousands of dollars. Trust me, some of these are gambling. It's not that it's not possible. It's possible. I will use an example for you. If you had entered trade here, you entered trade here at 1812. Yeah, let's say you stake $100. You enter a trade here with a good lot size, and to your favor, the market came up all the way to 2148. Of course, you'll be counting dollars, thousands or hundreds of thousands of dollars here, but this is usually not the case. Okay, this is usually not the case, because at the same time you could have entered a sell here because you saw this run of sell, and then all of the sudden it go against you. Within no time, with this short movement, your $100 will be blown away. So don't be careful with what you risk. We also have a video on risk management, completely on risk management, how many lot sizes you should be trading, what should be your leverage. Okay, so check all this. Your risk management is very key. Now, consistency. I talked about continuous learning. Continuous learning is for you to do continual. Before I come to consistency, continuous learning is exactly this you are doing now. For you to join this live channel to watch this video, you are actually trying to learn and know more. Okay, continuous learning will be for you to whatever strategy you have come up with that you want to trade. This is very simple, right? Whatever strategy you have come up to trade with, make sure you are consistent, get to know it well. I will still be mentioning some other tools that I use for confluence marking in the course of the explanation. Make sure you are very conversant with the tools you use. Study them more. How do they behave? Do more of backtesting on a demo account. Then you will get confident on your strategy and you go to the market with it. You don't need to know the whole different strategies of this world. You hear this in forex, so you jump into that. No, keep it simple. Keep it very, very simple. Have some 3, 4, 5 tools that you master. do some combination of tools, as I will show you in the course of this combination of tools that through which you trade. And with this, be consistent with it. That brings us back to this consistency. Be consistent with whatever strategy you have adopted. Having said so, know that trading is not all about win. That is why we talk about entry and exit rule, where you have your profit and stop loss target. The stop loss, okay, let me include this here. Profit and stop loss. Stop loss target. Stop loss target. Good. So if trade is all about win, right, there wouldn't be anything we call stop loss. No, it's not all about win. Some you win, some you lose, but your risk to reward ratio should be such that at the end of so many trade, at the end of your trading cycle, let's say you want to look at weekly or monthly, your profit should outweigh your losses. Okay, so this is the essence of that. And again, know that we're talking about price action, and we said all it is bringing together all the tools you have learned, everything you have learned, putting it to work for you. Okay, this is different from trading technical charts only, or trading fundamental news only. But this is strictly looking at price action, looking at the candles, what's the candle telling you, and then putting them to action. If you have not watched our videos, go back to them on YouTube. We have a lot of them on YouTube, where if looking at this candle, what is it telling me? Okay, what is happening here? All this. So we have a video on that. Go back, watch them, and then you come back to summarize it with this last stuff we are working through today. Okay, so I will take a short break here. If I come back, then we continue to bring together all the tools we have learned on our previous videos, and see how we can use them to talk to the charts we see in front of us. And possibly towards the end, we will do a review. This is XAU USD daily live chart. This is live chart. There is no trade today. That is where we are currently, but we will analyze after some few examples. We will come back here to see how what will our market look like in the coming days. Okay, that is the coming week ahead. Stay tuned after the break. Welcome back. So now we will be going into the market to look at how we can we study together and analyze price movement and patterns on this chart to determine entry positions. What I have done before during the break is to put together what the few steps we're going to go through now together. I reduce the sizes of these ones just to place the focus on what we're going to do next. So to start with, we'll begin to plot our support and resistance zone. I talked about this in the past, where I mentioned that support and resistance zone is also called as the demand and supply zone. So what I need us to do is to go back. I want us to go back as far as possible, then to make this to begin this analysis. There are replay. Let me say, do you want to exit replay bar mode? Yes. So I want to go as far as possible, so that we will have some time together to do the analysis, to have different scenarios. Okay, Okay, let me cut it here. Now, what I have done here is to have, I want to play live. I want to do as if we are just entering the market, and when you join this the trade, this is what you see. Okay, when we join this trade, this is what the chart looks like. So first of all, I need to mark out my demand and supply zones, or in other words, the support and resistance zone on this chart. So this usually give you good indication of what is happening, where is the market going, and what to. By the way, from everything we have talked so far, we would see, I would just make some notes here just to rehearse what we learned. Here we see, this is when you see a long full candle like this, either green or red, we call them momentum candles. This is a momentum candle, this is a momentum candle, these are momentum candles. Okay, momentum candles. And what do they indicate? They indicate the market players had come into the market, either banks, financial institutions. They have come into the market to actually force the direction of the market. Myself and you, we are not part of the big. We are not part of the big boys. We don't have that much money to go into the market and move the market. But what we can do is that when we spot this opportunity, when we know they are coming, when they are already in the market, the direction they go, we trade along with them to also make our own money. So that is it. I would use this to begin to plot our support and resistance zone. Let me start from here. There are momentum candles here, right? Which means the big players came into the market and they moved down here. Okay. What I do is that from here, what you can do is the first momentum candle, the last candle before it, which is this green candle, you go here, you pick your box tool, you place it here. I place it on the, that is the full length of that candle. Okay, let me draw it back. If you see, it covers the green candle. So this is a supply zone. What I also do is that I make sure I use, let me configure this to extend to the right, extend right. Okay, so here I'm using pink. Let me use red because it is more of a downward trend. I will use red to indicate the supply. Now, what happened is that you mark out your supply zone. Again, what would have played out here, as I said, the big boys entered the market here. They forced the market down here after a series of consolidation. You could see there are, I'm on the daily chart, there are several days of indecision. So a lot more from here. Almost how many days? If you count the candles, each candle represents 1 day. If I count the candle from here, this is more like 4 to 5 weeks before they entered the market. Again, I talked about discipline. In this type of market, you be extremely careful not to lose your money because there is indecision in the market. You patiently wait to see when these guys is going to come into the market to move the market. It's usually an indication that something big is about to happen. Or in this case, there is a momentum candle here before this. Immediately after this happened. Okay, so I think that is the right place to start it. Some few days back there was a momentum candle here. If I place this one on that candle, that's the previous candle before it happened. I think I have it like this. Let me zoom it out and see if it has covered it. Yes, it has covered it has covered. I can't see that candle well. I can't see the candle well. Let me see. Okay, I think it's at the lower, at the base of this candle. Then it also covered the up here. So now this is my supply region here. What happened is, because of this momentum candle, there is an indication that something is about to happen. What you do, as I said, the rule is to look at the candle, the previous day candle before this, and then use that candle to determine, to mark out your zone. Then after that, the rule is that, okay, I think I will have to write down this rule as well. The first rule is, that is on placing your supply and demand on the chart. First rule is identify a momentum. Sorry, I didn't write this beforehand. Identify a momentum candle and mark your region with the last candle before the movement. Okay, so we have identified that, we've marked that out. Okay, let's say, okay, we will update this as we go. Then you wait. Condition 2 is that you will observe that region to wait and see when price action come back to touch that region, which is here. If you check this green, the wig of this green touches this line at this point. So condition 2 here is wait for price to come back into the region. Then condition 3 would be that when in that region, step down to the lower time frame. Step down to the lower time frame to determine your entry point. Wait for it to come back to the region, then step to the lower time frame to determine entry point. Okay, then when you determine your entry, in this case we are in daily time frame, so you shift to the 4 hours time frame. Okay, and this is the candle. This green candle is actually the candle that you will use for this exercise. Immediately it touches here. Let me see if I can. I hope it won't take me back. Immediately it touches here. Yeah, I want. Okay, let me lock this first one first so that it doesn't move now. So immediately it touches here, all you do is you go to the lower time frame. That's the green candle, right? So let me also lock it. So you switch to the lower time frame, that is in this case the 4 hours time frame, and look for an entry. Let me see, where is my did it take me forward? My replay is still on. Yes, where is it? Maybe I have gone to. Okay, let me go back to the daily time frame. It seems I didn't tell it to. Oops. Okay, I'm not losing it. Let me show visibility. Visibility on interval, current and below. Similarly, visibility on interval, current and below. Okay, so what will happen? Let me go back to, and this day is what, 8th of March. Okay, around March. So let's go back to the 4 hour time frame. Let's go to, this is June. Okay, good. We have to go back. Wednesday 11. Okay, back again. back again. 12 January. I've passed it. It should be somewhere. Let's go gently. I just want to show you how. Come on. Oh my God. Okay. Unfortunately, I'm not able to pull that back. Which year is this? 2013. 2013. I should be able to go back to 2013, right? March. Okay, sorry. This is covering it. This is in, this happened. This is Tuesday 9, April 9, 2013. So let's go back. I will look for it. I need to, this is 2015. Okay. It's 2 years behind. 2015. Okay, because why I have to do this back test, long one, we need to see many many places that this will work for us. That is why I have to go this back. October is in April, August. We have to go back. Good. This is the region. Okay. So if we check here, what I said is immediately it touches. This is the candle that touches this region. Okay. Immediately it touches this region. All you do is you begin to look for your entry position. If you also have watched our candlestick patterns, what we said about candles is that we talked about engulfing candle. Okay, so here, if I zoom this out well, we see that you have an inverted, more like pinhead, right? An inverted hammer here. Then we have this candle as an engulfing candle, and again we had a momentum candle. Immediately you spot this momentum candle of the 4 hours zone. This is where you place your entry. Okay, this is where you place your entry, and the entry before this is a supply zone. If we had, okay, you place your entry at this point. Let me mark the entry point, which is Wednesday. You see, we spot the opportunity on Tuesday. The entry did not come until a Wednesday, around 4 p.m. on Wednesday. That's when the entry eventually came. Okay, so we will go back to the other side. There is something I did not mark before. I need to mark this is the supply. I need to mark the demand. Okay, now I will switch back to the daily time frame, and this is 2014. We'll go back again. So this is our supply zone here, right? Let's look at, before this place, do we have a demand zone that we could mark? I talked about momentum candles, right? This is, let me move this favorite here. We have a momentum candle here. There is a change of trend here, right? And this is a momentum candle here. Okay, even though it's ranging, but this is a momentum candle. So this become your for this region. This is when you spot just the reverse of what we had up there. We said when you see that momentum. Okay, by the way, before that, if you look at this candle and this candle, which of the two do you think has a stronger momentum? Of course, is the single candle that make this journey has a stronger momentum than here a combination of candle. Because if I check the length of this, where is that tool? If I check this, let's see. Yeah, just a little more. This is the full length of this candle, right? If I compare it, if I compare this length, this candle with this, you see one of this candle comes to here, so this is a stronger momentum here than the previous one. So what happened is this has a stronger momentum, which means this has overshadowed this one. This region now, what will happen is we will mark this as the demand zone. I come here again, use this line, use this, I want to see it clearly, use this one. Okay, let me change the color to green. Yeah, so this is our, is mapped forward. This is our lock it, this is our demand zone. Following the rule we explained before, is that we said when you see a strong momentum like this, you mark it out, then you will allow the trade to come back into that region again, and with another engulfing candle, you check our engulfing candle video, with another engulfing candle out of this, you can enter your trade. Remember, we are defining the rules. This is on the daily time frame. Yes, so you can enter your trade, but before you enter your trade, you go to the lower time frame and look for the entry, to look for the entry signal, which we did. They show an example of the 4 hours time frame. Okay, so from here, if you are entering a trade here, you are entering a buy, what you do is that you place your buy and your take profit will be in the supply region. Okay, if you look at it here, which is this one, this is the momentum candle here, this is the previous candle before it. You place this, change it to red because it's supply, then lock it. So in this case, this is your supply region, is marked here. Assuming you did not spot this, you were not in the market when it happened, you marked the supply zone, no worries. Here you now saw this momentum candle, and then you mark your demand zone here. So at this point, at this entry point here, when after you mark this, okay, I mark here, I said when it come back here, you place your entry, you place your buy. The third rule is that when you place your buy, we talked about entry and exit, right? That is your take profit and your stop loss. What you do is that, where's that? This is your buy. Yeah, this is the buy. At this point, if I had gone to the lower time frame and I have calculated my entry point, meaning, for example, I decide to enter the market here, your stop loss will be below this region. Okay, some pips point below this region, and your take profit target should go into this, into the supply zone. Okay, if I check this is ratio 1 to 4, right? 4.0. Now if we place this market, what you will do, remember, look at my entry point. Immediately I entered here, the market, if I enter here, the market went up a little, it started coming down. But because I placed my stop loss below this, look at what happened. It came into the region, it did not knock me out. Okay, then it came back. Let's extend this front a little. Once it takes either profit or loss, I will delete that. Okay, it's not there. Cancel this. Yeah. Now let's extend. So what happened is it did not take me out here. Usually, to minimize your risk, even though it took the profit here at this point, because I started here, okay, to minimize your risk, immediately the market come back here and move out, you begin to adjust your, we call it break even approach. You begin to adjust your stop loss closer and closer, so that when eventually the market decide to come back, like as it did here, you see, it still came back here. If it's going to, for example, it decide to reverse, maybe after, because there is another zone here, which is a very strong resistance zone. It come here, it come back, come here, it come. So the prices are being rejected here. And something I've not shown you, the prices have been rejected here. And if it happened that during this rejection, it actually came back, then it will minimize your loss impact. Remember I said that trading is not about one time shot that you make it. It's a cumulative analysis of all your trade together at intervals that you decide to sit back and look at your trades over the week or over the month, what you have made. Okay, now this is the way we enter the market. First of all, we mark. First thing you do on your chart is to mark your supply and demand zone. Then the second thing is that you look out for momentum candles. I will update the content I'm writing. You look out for momentum candles to make sure you the supply and demand zone are not just marked out of common, just your mere feelings. They are marked out as a result of what actually happens in the market. Then I have exponential moving averages here. That's my condition 2 there. I call the 50 exponential moving average, which is actually this blue line. Okay, what about it? This is 200, this is 50. The 50 moving average is that for me to actually be sure of this market, right, that the trend, there is a trend, I use the 50 moving average. The 200 moving average is slower than the 50 moving average. So how do I use the 50 moving average? When your candles are below 50 moving average, know that you are in lower trend. Don't take a buy, because I trade the trend. Don't take a buy. Trade the trend. So if it's in the upper part of the blue, then you know you are in the uptrend. Then you take a buy entry. Okay, of course we entered early here, and you could see the effect of it, that we still had a buy. The price still come back into our region before eventually it moved up. So in the next one, we will look at, okay, let's try and satisfy this rule. Remember we talked about shrink points. Shrink points are actually this region, because when this market came down here, it came back up. Let's see what happened after this. It's again out of this. So these are shrink points. Okay, shrink points. You see again another one here. At this point, you had these momentum candles. Okay, you had this momentum candle. What you do is that you either you change this, you shift, you place another one. If this is the point you entered, you see this, you saw this momentum candle, you place another supply region here, meaning your supply region change. Then you wait for it to come back into that region, which happened here. Then the other condition is to wait for the chart to go below the 50 moving average, which is here. Look for your entry position, and then you enter for a sell. Okay, similarly, okay, we had one here that we are still yet to enter. Now in this case, this is the supply region. Where is the demand? This could be somewhere here. We had one here. Is it strong? Is it a strong momentum than this? Stronger momentum than this one? I think this is a stronger momentum. You had 1, 2, 3 is stronger. A combination of candlesticks or 1 or 2 candlesticks will do that. Otherwise, if you want to consider this as this, you have to use this. But again, is there 50 moving average condition satisfied? Yes or no? If I'm using this, it's still below, so it's not a buy. If I'm using this as momentum candle, it's still below. Okay, if I'm using this as momentum candle, yes, it's above it, but not, it's still within the line. We keep moving here. There is a momentum candle here. It is below. This is not strong. You have another momentum candle here. You have another momentum candle here. It breaks this. Let's look for another good region. Yes. No, this is so this in places like this you avoid it because they are just mere consolidation. They are consolidation. We saw it at the beginning of this analysis where we had a very about 35 days consolidation before the real move happened. Yes, this is one. I see one here. After these several consolidation short movements, we have this as a possible, this is a very good momentum candle. You can mark this region as your supply zone. Mark this region. So you can mark across different instruments, not only even forex, even bitcoins, whatever it is. But in forex, not only the gold currency pair as well. You can be Euro, USD, GBP, anything. It works across all currency pairs. So what you do, you mark this as your supply zone here. Okay, and what you do is that the rule is this: if I mark this as my supply zone, I am not entering any market here until it comes back to touch this. It's clear here. Nothing has happened. Let's see. Yes, if you miss this, you shouldn't get worried that, oh, I missed an opportunity. Okay, nothing happened. You didn't see anything there, so we leave it. Here I see another momentum candles here. This momentum is stronger than this, as we said. Okay, so what happened is you will mark, let's use the stronger one. This is the last candles. This is the last candle before the momentum candle. You will place your, where is it? Is this one, right? I do this, I bring it here. In the rule, this place breaks it because you have another region below it. So this invalidates this. I'm not going to use this as my momentum candle. I'm now going to change and move it here instead. So this is my momentum candle now. This is my, in this case, I'm marking because it's up. I'm looking for the what's it called? The demand zone. So let me change the colors to, first of all, lock it, then change the colors to green. Change the colors to green. So this is another demand zone. So the condition is that once you mark it, you wait, it goes back and come back to touch. Now it touches, this is the candle that touches it. What did we say next? If the candle touches it here, then go back to step down to the lower time frame to look for the entry position. This is October 2015. Yeah, October 2015. So I will have to step down. I will have to step down to the lower time frame. Sorry, let me sip my coffee. Yeah, I will have to step down to the 4-hour zone to look for my entry position. Remember, now it is above the 50 moving average, right? So I will step down. By the way, before this, there is a supply zone here, right? Because this is this will be the target. Let's mark also the supply zone here. We have a supply zone here. It is above that supply. That will be red. It's as simple as this. I have a supply zone. I have a demand zone clearly marked. So at this point, I spot an opportunity because I need to see this. So why do I need to go into the lower time frame after this candle? It's just for me to spot the entry position so that I'm not I'm not knocked out of the trade so early. So if I go to the 4 hours time frame here, oh sorry, I need to highlight it so that we know the candle. This is the candle. We said after this momentum candle, we look for entry on this next candle. This is the next candle. Okay. So what are those things that we look out for? We look out for every candlestick pattern, engulfing candle, whatever it is, but mostly I use the engulfing candle as my entry. So within this region, after this, you see, if I had entered with this the close of that long candle, you see it begin to come down a little. Yeah, so we have series of we have doji candles, butterfly, inverted pin, whatever it is. So here is the, after this inverted hammer, this is the entry here. This is the entry here for me. So in the entry here, I would place a buy, which is this point. Yes, this is it now. The stop loss will be below this region. Okay, the take profit will be the next, so I have to switch back to my daily. Okay, is below this, then my take profit would go to this region again, which is ratio what, 1 to 2.7. I think, yes, you can, usually I make it just when it touches it, but the body of the first momentum candle, that's the usual, and then you pull it forward. Okay, so what happened is, I said if you enter the trade like this, first of all, look at our conditions. We use this this region as the marker. It went out, it came back to test this. We stepped down to the 4 hours time zone to mark out, to look for our entry position. We saw the entry. Let me take this out. We saw the entry and we entered the market at this candle. Okay, now our stop loss, we pull it below this because the market could play around and still come back to this region. Take profit, we move it to the next supply zone. Okay, and when the market begin to move, what you do, you go back again to the lower time frame to begin to tighten your stop loss. Okay, so let's see what happened next. Let me reduce this. Okay, so if I say play, okay, yeah, it's okay. No, let me increase it. Let's increase it. So you see, this is what I was saying. It took us out. Stop. This took us out here. Here, what happened is, immediately, let me go back a little. Okay, let's leave this. What happened is, immediately you enter the market here. Immediately you enter, where did we start? We entered the market here. When it goes up like this, we are supposed to come into the lower time frame and then move it to this region, move our stop loss to this region, so that at the time it's going to take us out, the impact will be minimal. It actually completed its journey here and it came down up, it came down here. So we will still be at loss here, but the loss will not be as big as what will happen here. Okay, so this one took us out. Then we move again. I said it's a cumulative trade, right? So at this point, we were taken out here. What happened is, we begin to monitor again. Where will we have the momentum candle? And in this case here, there is another momentum candle here that actually changed the supply zone. So because of this, we have to mark this new region as the new supply zone. This is the new supply zone. And what lesson did we learn from this one here? The lesson learned here is that we were close to this. We were close to the 50 moving average region. Okay, when when we entered our trade, there wasn't a clear one out of that, right? Then here, if we mark this as our new supply zone, do I delete this? Let me delete this so that we don't have. If this is our new supply zone, and then this is still a demand zone, but in this case it's broken here. The demand zone here is broken. So the next thing is to look for a new demand zone. Stop. No. Yes, stop. Looking for a new demand zone. There was a momentum candle here, right? But it's still below the 50 moving average. Continue. Good. Stop. Above. Yes. Continue. Yeah. We have, if we see this again, this is more like, we talk about swing point. This is a swing point here. This is a change of character. We have this region as the last region before that. Then it's above the 50 moving average. It came back here. The next momentum candle is this one. Let's mark this zone out as our new zone. Let me take this unlock. So this is our new zone. This is live, more like what is happening live. If we mark this as our new zone, what is the rule? The rule is that it's going to come back to test this region before we can consider it a valid point to enter a trade. Let's see what happened next. No, it knocked us. We were late on this, but let's see. We missed this opportunity here. So there is another consolidation happening here. Now we will take advantage of this consolidation that is happening. Yeah, it breaks below it, went back into it. Good. Momentum candle, big players into the market. Stop. Now look at how long it took to come back into this region we had marked before. Again, what happened? Is it going to break this region or is it going to continue? Let's watch this one. Stop. Now again, it came back into this region. It touches it slightly here, right? Yes. At this region, you have to step down to check if there are possible entries. This is and everything is happening above the 50 moving average. This is and if it's above, you actually here you're supposed to be on a buy. What we look at here is we have a momentum candle here. Let me play this forward a little. Then it breaks it downward again. So it's consolidating around this. So bam, it breaks it downward again. Hold on. So it breaks it downward again, which means this is a very strong supply zone. It doesn't matter how long it takes, it comes back to play within this region. Okay, then it moves down again. Let's go forward. I want it to take us to where we currently are, then we use it to analyze. Okay, it's going towards again, it touches stop. So this is another zone again on the market. Let me move. If I move this to weekly, will it show clearly for us? Okay, I ask it to stay. I ask this to be okay, good. Let's continue. Yeah, this is broken. It came back into it, broke it back. So this is what we call fake breakout. This is fake because it didn't retouch it to continue. So it breaks through, it came back. So this is just a fake breakout. It's continuing here. Let's see. Yeah. And again, if you check the candles, they are smaller candles. They are not momentum candles. So it's risky to actually enter. Yeah, we spot another one here. This is another momentum candle here. Okay. Here you could mark this region as, again, in between trades, in between structures, what you do is you spot, because some people are day traders. This is more like I'm doing this on the higher time frame. What if you are doing this on the 1 hour and 4 hour time frame? Okay, so it depends. And this crossing, they are also an indicator of change of character. When you see the 50 crossing 200 downward, it means that the market is about to turn this way. The market is about to turn. The same thing if it happens. Let's see whether they cross here as well. Yes, crossing upward. This is another indicator that the market is about to change trend. So in this case, if you mark this as your demand zone, you will be patient. If you mark this as your demand zone, you will be patient to see it come back to touch this zone. Okay, you'll be patient to see it come back to touch that zone before you begin to decide entry. Okay, it came close to it, it didn't touch it. Yeah, and again it's ranging within stop. Now it touched it here. So when it touches it here, what you do is you begin to look for entry point. You have to go to the lower time frame, look for a buy opportunity, and when you spot that, you move. Again, what is it that I see here? You see series of this is ranging, right? If you go to a higher time frame in this region, you will see a chart pattern that has formed. Okay, in this case, 1, 2, 3. This touches this region almost 3 times. What do we expect here? If you go to the lower time frame and you place a buy here, your target will be, it's a long target. Your target will be that okay, in this case, this is the closest one. You will be targeting this region, because when you have this break, so you'll be targeting this region 1279 or thereabout. Let's play 1279. Yes, it breaks it, it hits it here. Okay, then again it consolidated. Stop. Stop. Here you have momentum candles as well. What happened is that this is coming from this candle. This is the last candle before the momentum candle. You place another marker there. This is called what we are doing now is called back testing. You place another marker here and wait to see if it touches it here. It touches it. So what did it do? It breaks it through. No, fake breakout, still consolidating within the region. And again, the 200 moving average is behaving as the support here. Okay, if it does, here is risky, is consolidating, you have a support here, and we need to wait to have clear movement before we jump into the market. By the way, if you are looking at this, these are news, these are potential news, US dollar news that would actually happen along the line to determine what happened. You see here there is a momentum here, strong momentum, which might be as a result of the news that happened here. This is core inflation, retail sales, inflation rate here. So this type of news would actually affect, because the players wait, and this is also the reason why you see a lot of consolidation before this happened. The big players were waiting for this news, and after this news, they take their decisions. Okay, if this is a momentum candle, okay, you see as the news is now stop. The news impact look at it consolidating here. The news impact is actually having effect on this. So this region now, this demand region is broken here. Okay, it's broken, and also you see the 200 moving average is also broken downward. You cannot hold this as your demand zone again. Let's continue. Yes, stop. This become the new one. You have you had a momentum candle here, so the demand is actually from here. You change this. Let's delete this one instead. This is the new demand zone, but you will have to wait for the price to come back to it, to come back to this region. Come back to this region. Yes, play. Before you can use it as valid entry. Yes, oh, I missed this opportunity. Yes, you missed the opportunity. Wait for it if it ever comes back here before you place your entry. Otherwise, don't hunt. We said don't hunt trade. Oh, you force it because it is going, then you enter. Assuming you saw it going here and you decide to enter here, what happened? It goes up, it comes back. Out of panic, and again it's consolidating here. Right, it come back again to this resistance. What happened? It breaks the resistance. It's trading below the 50 moving average now. There are actually opportunity for you here to take the trade, because immediately it breaks the 50 moving average. You wait for the momentum candle. You had this momentum candle. You place you mark the zone here. Make it red. You mark the zone there, then you wait for a retest. It retested here. Immediately it retested here, you step down to look for your entry, and your entry from this region. What's this? Sorry, you step down to look. Immediately this is where it happened, right? You step down to 4 hours. You step down to 4 hours. So where is it? Yes, it happened here. You step down to 4 hours to look for your entry. This is your entry. Immediately you have this engulfing, you place your sell here. You place your sell here. Okay, then I will have to set this on the daily time frame. I place my sell there. Where is the? So I have to set it on the daily time frame. So little above this region, then the next take profit will be this region, right, as I said. And if you had checked this trade, it took the profit here. Now again, know that this is a demand zone, and it went out, it came back, which means from here again, immediately it touches here, you begin to look for your buy. You step down to look for buy if it's going to be possible. Stop. Okay, let's shift this backward. This happened, right? So immediately it touches here, you come in here now you step down again. After this candle, you step down to look for a buy entry, and you need to be careful not to be carried away to jumping into a buy here, except it is very clear that it's going to be a buy. If I step down here to 4 hours, what did I see? It's still a sell, right? Then I also not be stupid to jump into selling here, because I'm already in the demand zone. Let's play. Stop. I have a clear entry here. So if I have after this candle, this an engulfing candle within the region, then I place my order. I can place a buy order here. After this one, I enter the market, go to the daily time frame to set it. When I enter the market, I draw this to this region. The reason why you need to be this tight is so that if there is going to be a fail, it takes you out immediately. Okay, so my take profit, where is it? This is the full candle. This is my take profit region. Then immediately start moving. You need to go back and adjust your position. stop. Okay, yeah, continue. Yes, you see it takes me out here again. Then I have another region. Yes, it touches this region again. Let me 1 second. I will take a short break. After I return, we continue. Thank you. Come back. So one of the advantages of marking these multiple zones is that, and if you mark them on your chart, leave them there. Historically, those regions which are called the swing points would always come back to play. Now we were waiting for this price to come back here. It breaks this point. It's also called the pivot point. So it came back here now. It's within this region. What we are going to observe is that, is it going to break it, or is it going to go back up? So from here it breaks it. Okay, it came back to another region. This becomes another support zone. So we have done this multiple mapping in the past, and it's ranging here. What's going to happen? Coming back down or up. Note the 50 moving average line, an early indication of what will happen. Okay, this is a very important zone. Now as soon as it breaks this, now it has changed direction again. So with this, because we have marked it behind, so they form different zones for us to trade. Now once I saw this momentum, I'll place a trade to come up here. Immediately I am out here, I wait again for another entry position. Then here again, here I see another clear one here to enter a sell. It's coming down. It's below the 50 moving average, still below it, still below it. Now again it's out. So stop. Now this is, so what has happened here? Let's pause and analyze this. After this ranging here, we have this, they came in, then up, down, up. Here again is ranging here, and potentially this would likely begin to go up again, because this is supposed to be a strong momentum, but one momentum candle came and break it. Take note of this. Don't ignore this doji. After the doji, we had this, it retested this region again. There is what we call support turn resistance. Support turn resistance. This become a support, that a resistance turn support. In this case, when this was going up here, it's supposed to hit this place and come back, but it breaks it through. When it breaks through it, it came back into it. Instead of breaking it backward, is consolidating to go up again. So this becomes this is a resistant turn support. Resistant turn support. Yeah. Okay, and you pause again and look at it. Your 50 exponential moving average is below, the candles are above, the 200 moving average also is below. Okay, so potentially an uptrend has begun here. So what we can do here is to now look for our entry position. After it breaks this, there was a retest here. We look for an entry position and then place a buy. Do we have a supply zone above this? And again, bringing all your tools to play here, you can, yes, stop. So immediately it breaks this and you see an entry position. The next target will be this this zone. There we have I have to, let me see if I go to the weekly time frame, if I can do that for you here. Good. In the weekly time frame here, we have, let me zoom it close. Yes. So there was a change of character here, right? This is the lowest, then this was the, from the region here, from this region, this was the highest, this was the highest, this was the lowest. If you place your Fibonacci tool here, If you place your Fibonacci tool on the weekly time frame, where is it? The Fibonacci, start from the week here and at this week. Okay, you see that we have the first of the market came to the 0.38 region, came back to the 0.23 region, went straight to 0.78, consolidated, go back to 0.618 region, consolidated for a while, it went to 100, right? Then it began to go back again that way. So let me extend this Fibonacci setting. Let me extend it to the right. Extend lines to the right. Let's see if we can place the labels 01, 1.618 extension. I want to see if I can place the labels middle so that we can see it as we go. Okay, font size. Okay. Now transparent more little so that it will not. Yeah. Okay. I want to use this to determine the zones. Okay, visibility should be it should also show on the hourly, not only daily. Okay, good. So now putting the Fibonacci here, I want to also, you see, this is within the 0.5 region here. Okay, what am I looking for? Yeah, going back to my daily time frame. Yes, on the daily time frame is here, so meaning this is the 50, the 0.5 is within the 0.5 region, and then we play. We'll see what happened. It came back there. You see, this is very important for me. There are two confluences here now, the 50 moving exponential moving average and the Fibonacci retracement level of 50. Look at consolidation happening here. This is market indecision. So you will, at this level, I'm waiting for stop. Let's analyze this further. Remember, the market is still in the uptrend because it's above the 200 moving average. You have the 50 EMA line. The price is consolidating within that region, and you also have the 50. You also have the 0.5 Fibonacci retracement level here. So it's consolidating within this region. What happened is that it is very dangerous to actually enter market in this type of situation. Okay, you see, if you begin to use your trend lines as well, you have this region that this price is consistently rejecting. I remember I told you these are price actions, so it's consistently rejecting this region. You can also play something like this, and or better still, let's use the other one. Let's use the channel. So if I say I mark this, I bring it down here, I mark this, you could see that it's trading within this channel. So already it's in the up channel here. Whatever I had seen here, is it okay for me to enter? It's a no, because there is potential that it reverses back into this channel and up again, and until it breaks this channel before I can begin to look at other decision. This is price action. Now it breaks it here. It breaks it. So after it breaks it, is it coming back to retest it or not? You also have to consider that. Now again, it's within another region. This is, sorry, hold on, within this is 0.5. Where is the label for this? Let me check in the weekly time frame. 0.5, where are you? Center? No, to the right. It's not 0.5, then 0.23 region. Is within the 0.23 region and 0.38. So it broke 0.3. Immediately it breaks this channel here. So if I check here, immediately breaks this channel using this as your demand zone, then you target, the next target will be the next supply zone, okay, which is up there. And as I said, this is 0.38. So 0.23 region would actually be your next natural target that is going to hit, which is this red line here. All right, so it's still consolidating. Yeah, now it hits that. This takes it hits the 0.23 region here. Within this region, it's also consolidating again. It will consolidate a while. Yeah, consolidating within the 0.23 region. The next region will be the 0, that is up, right? Let's see how it goes. Stop. Yes, it breaks this. This is the 0 region. That's the starting point from the other side. So it hits it here now, and again it's actually a momentum candle that comes into that. What happened is you will have to draw. This is the momentum. This is the last candle. You have to draw another, because it's a very strong one. You draw another line. It's taking us close to where we started. Let me see. Did I lock it? No, I didn't lock it. Yeah. So what happened here is that we will draw another one here, and actually expect it to come back into it. Change this to green because it's above the 50 moving average. Change it to green, then play. I'm expecting a retest of that region. Usually also you see that the 50 moving average is also forming a support. Immediately it goes above it, it touches it here. There is likelihood that they will kiss themselves somewhere here. This is the kiss. Pause. Now it came to this region, right? What will happen is that using the Fibonacci retracement, it means if it's going to break this region, the next region is the next Fibonacci extension region, okay? Which region, not the line itself, because I didn't mark out the region based on the Fibonacci, but usually that's what's going to happen. It's going to come to this level, then break this level above, and then continue. Oh, sorry, I'm in the weekly. Yeah, so in this case here, if I look at the daily, we had a momentum candle here. The next target will be this. Where is my tool? The next target I would look out for is this zone as a supply zone, or the next key level, which is this. Bam, it hits it again. So sorry, anyway, I will just pause to explain to you. When we mark this as supply zone, our expectation is always, if it goes, it's going to come back to touch that place, and when it touches it, we look for entry position and take our sale. So if you had discovered this and you also place an entry here targeting this region, you take your profit here. Okay, that's it. You'd have taken your profit here. Then again, you look for another momentum candle to mark out your new supply or demand zone. Let's continue. The concept is clear. Now I need to add something again. Marking these regions actually help a lot, because what it helps us do, it create that consciousness in us that when we see price within this region, we should actually wear our thinking hat. We should wear our thinking hat to begin to check which direction the market is going to go into, bring all the tools we learn, check our discipline record, to look at our diary to tell what are the rules, what are our trading rules that we have set for ourselves. And remember again, I was using the daily and 4-hour time frame for this analysis. What it means is that if you are, this is for swing traders, if you are a day trader, you could use the 1-hour chart analysis for your higher time frame to mark the zone, and use the 15-minute for your market entries. Okay, both works, whichever time frame you are. It all depends on timing and how much capital you have in the market. For example, for myself, I don't, because I am a working professional, I don't have time, I don't share my office time with trading. All I do is to do higher time frame analysis, make prediction. I could tell that, okay, in the next 1 month, this is the direction of the market. Then check my risk to reward ratio, what I'm expecting to get out of the market, how much capital I'm putting, what percentage should I enter with. Then I leave it, let it go. Sometimes in a week, I will not even look at the chart. Okay, at the end, I will tell you one secret that I also use to, if after marking my zones, when do I necessarily need to go and look at the chart. That secret is at the end of the video. I will let you know. So let's continue playing. Again, it come back to our one of our regions. Here, play the button. Good, it breaks it. Do we have another region? So what we need to check is that which region is this, which Fibonacci region is it that it came to test here, consolidated around that region. Then is it good? Once it breaks this, we know now it breaks it. Sorry, it was faster than me. Immediately breaks this region, the next target you will enter your market to set, once all your market conditions are satisfied, would be, first of all, it breaks it here, it retested. You have this, this becomes the zone, because this is the momentum candle here I want to use. This is the momentum candle. Yeah, from this, it breaks, it's above 50 here now. I look at this, I mark out my region. Hold on. Which one? No, it's actually happened here. This is the zone. So from here, if you mark this, what, I don't know the Fibonacci level this one is. Is it? Yes, it is. I don't know the level it is. So looking at the, I didn't lock it, I should have locked it. This zone, after retest, it came back here, it retested it. If I had marked this region, then it begin to go up again. So again, from here, this is why, again, when you are entering trade, you break it down. If I want to enter like one lot size, what I do is I break into 0.3, 0.3, 0.3, okay, in 3 places. Then each of them with different take profit target. The first one, I will use this zone as the first take profit, the next zone second take profit, and the other zone as the third take profit. Also, don't forget that as soon as the market begin, you begin to enter to reduce your stop loss region, so that you can actually break even. Let's complete this. What my next analysis now will be on what is the next possible trend. So I want this to play to the end. Good. Okay, there is something I need to also explain here. This, when you see long wicks are very give us a very good indication of what is to happen. Here we had this long wick here showing that there is selling pressure came in here. Then we had the momentum candle and it came down. So the selling pressure got here, then the buyers came in, the big boys came in here and said no. They begin to push for a buy. You have this candle, and then this happen. The momentum, strong momentum candles come in. What usually happen is you will check, will it come to this region? Look at also a lot of lined up news here. You mark this region for a possible, is changing again, so called pivot point. So this is this region, right? A possible retest of that region. If it retests this region, then look for entry position to do a buy. Yes, it retested here now. Pause. Now, after retesting here, what do? I need to go down to the lower time frame after this momentum candle to check for a buy entry. When you have the buy, I won't do that. You just need to step down to 4 hours time frame. As I said, 4 hours time frame here. This is the top 4 hours time frame. So there should have been, this is the candle, but is this going to break? Remember, this is the 50 moving average. Is it staying clear? Is still in the sell position? Is this safe for me to enter? These are points you consider. Okay, you play a little, let's see, on the 4 hour time frame. So it's still below it, still ranging market. Stop. Now this is the call. After this one, now I would have to place my buy, because this is a very strong momentum candle and this is the 4 hour time frame. So what I do is, after this, I will place a buy. Go to the daily time frame now. You see, I'm supposed to place a buy here within this region. So I will wait for this candle close. Move a little. Yes. So I'll do my buy after this candle. So I'll place a buy there. No, it's still below the 50 moving average. No, a buy is not good yet. A buy is not good yet. Yes. This is the point of entry here. So this, after this engulfing candle, I place my buy here now. Buy candle, yes, come in here. After this, place buy. This is the daily time frame. So if I place a buy here, this is the region where this is happening. So my stop loss will be just below this lowest wick here. My take profit of this one would go to the next. I could use the Fibonacci retracement here. Let me see. After this one, I think there is, I can see them clearly. Let me go to the weekly time frame if I can see it. Where is my? Yes, this is the next Fibonacci, and this is the next. But I can't see what I placed. 1939. So let's go there. Let me take this to 1939 is actually up there. I can't see it. Okay. Then let's play then. I need to tighten my, and I'm supposed to tighten my stop loss here so that it will take me out. But the 1939, yes, this is the 19th pause stop. This is the region. 1939 is within this region. So what I was to do here is to have extended it to this region, middle of this region. Then I think we need to be careful with this stop loss setting here. So this is the region. Then 1939, this is the point it took us. It took our take profit. Okay. Then continue again. It went to 2029. Stop. Let me show you something. Again, we have a new momentum candle here, which also set this as a new region for us to mark out. It set this as a new region. We didn't have this region before. Though it's a big one. yeah, again, this is outcome of a news. We can call it an outlier and leave it out, but we have this region here which is also tested. So sorry, supply. All right, I use this. The colors doesn't matter anyways. You can use same color for everything just to mark your regions. In this case now, we have this region, another important region for us to look at. I don't know which Fibonacci level it is, but here we have these momentum candles happen here. It consolidated a little within this Fibonacci retracement level. It came back in here and we saw this these candles that show us an indication of a sell. What will happen is on that candle, if we go down again on this candle, if we go down on this candle, let's go to 4 hours time frame. What is happening there? Do we see any entry? So this is the candle here, and there is an entry, clear entry here. So this entry, you place a sell here. Your take profit is either within this region. This is short, this is a short one. Yeah, yes. So it is going to the next, is going to the next region, which is here again, right? Play. It broke the 50. It takes your profit here. Now if it takes your profit here, so again you begin to look for another entry. This is just trading. This is what it is. And in most cases, if you stick to this, remember I talked about having your trading strategy, stick to it. If you stick to this, your strategy, what usually happen is that you will have more win than loss. You will have more win than loss. But don't jump from, okay, I tried this, I lost back to back, I have 2 markets take me out, so I'm no longer interested in using this. You are looking for another magic trade. So it's not usually the case. So these regions we have marked in the past, they are very important. You see, every time trade comes around that, there is certain behavior, market rallies there. You see, there are news here, news actions here. Again, your price has come below the 50 moving average. Here, I think we had candle. Yes, we had a pattern here. Stop. Let's assume we go to the market here. We got to the market here. We have marked regions in the past that were here. Okay, so there is one here. We can mark this as another region, a sell region. We have a region here. We have momentum candle here, and this is also, this will change. This is another momentum candle here. So again, but what we have seen here is a wedge pattern. We see wedge pattern at the end of a downtrend, right? This is a downtrend. Then after this reversal here, there is a W shape. I told you that this is all about bringing together everything you have learned. To get this, to look at this shape clearly, all you need to do is to usually I change this. So you see there was a run down here, it came here, it came back, it came up, which is, I think this one is better. If I start this here, I have this, it came down here, retrace a little, then it came up here. So this region that we have marked in the past now becomes the neckline of the W shape, and check, it came to retest it here. So from here, this is a clear entry point to look for, entry point to enter this market, because it retested and it's moving. If you see a small W also form here again, retested, and so, and then at the end of the day you had a wedge pattern here, which is a reversal signal. So this is a clear entry indication here. Okay, change of character, candlestick above the 50 moving average. You also see that it has broken the 200 moving average. There is a confluence, a possible touch of 200 and this here. So in this case, you enter for a buy, and then you target the next region as well. What we have not put into play here is also we have not checked our Elliott wave theory, that with Elliott wave, if this happen, if you see this, then you mark this as your, I think, do I have it here? I don't have it here. Let me look for it. You mark this as your Elliott wave, Elliott 1, 2, 3, 4, 5. You mark this as your 0 point. This is your 1. This is your 2. This region is your 2. Then your trade now will usually be 1.68 multiplied by the length of 1. Let me drop this here. I will correct it later. 5. So your 5, your 3, where is my ruler? Your 3 will be this distance. You measure this distance, which is 168.722 multiplied by 1.618. What will that give us? Sorry, multiply by 1.618. I need to pick my calculator. Wow. This is 168.722 multiplied by 1.618. This gives me 272.992. So what I'm saying is that if you multiply it out from here, take another ruler. From here, measuring upward is going to give me 2.72.99. Let's say 2.73. So what the other way I do it is from here, 1738 plus 272. That's, I'm reading the value from the outside here. 17 at 0. Yeah, 1736 plus 1736. So the market is going to 2008. So what will happen is I would enter here. I will enter a buy here. Then put my stop loss here. In this case, it's supposed to be below this region. Then my take profit will be 2008. Okay, it's more. 2008. I will extend it later. Just let's mark that. Then let's play on. Okay, 2008, which means my 3 here. My 3 here would go to 2008. That's what the Elliott analysis is giving me. And I will adjust this later. Let's continue. Sorry, pause. Let me turn it back to candle. Remember, I promised to show you some other secrets. One of them is, this is one of the use of the Elliott stuff to analyze is one of them. The other one is the alert system, right? So in this case, pause. Remember, I said with the Elliott wave, I said 2008. It has not reached the point here, though it's reversing. This is 1. Is this my 3? If it's 3, it means the distance between here and here should measure 1.618 of this. If it's not up to that, then this is not my 3. Okay, we said 1, 2. Where is the 1? 1 is actually here. 0 is here. So let's continue. Is this 3? I don't know. If this is up to 1.618, if this length is up to 1.61, okay, let's analyze that. Whether this is also another important. I have this length. This is 234.87. So 234.87 divided by 1.618. This gives me 145.16. Is this 145.16? Let's check it out. So from here, sorry, 145.16. Why is it not measuring? I need a ruler. Come here. 145.16. No, this 174, which means my tray is not completed yet. Okay, let's play. My tray is not completed yet, and part of the rule is that this will not come below 1. Pause. We said 2008, right? If I check, my 2008 is around this region. So which means my trade has happened here. My 2008 is around this region. So this is where my trade actually happened. Then 4 will come. This might be the 4. I don't know. And 5 is, it will return back to that zone or a little higher. So this is also Fibonacci, the Elliott wave coming to play here too, as part of the tool for price actions, right? So the other thing I would show is that since I talked about alert, assuming in this trade I didn't know, I only analyzed to tell. Now I'm taking out those initial drawings I did. In assuming in the trade, all I did was to analyze the point that I would enter the market. The trading view tool gives you opportunity. So this trade actually took us up to this point, 2008. So this is the take profit, which is another 1-to-2 ratio. And what happened is, immediately after I enter, after this, you begin to draw. You draw this closer, almost 1-to-10, 1-to-10 here, because I apply the wave, the Elliott wave theory, and this would require a lot of patience, because immediately it passes, I know it is the zone 1. After it passes this region, I would have set it to break even, where I would have moved it, because at this level now I'm not losing anything. I will have to move it to this point. Immediately it's making the 5th move. But what I would do is that since I'm looking at 2008, I can set alert here. Now, after the 3rd wave, the 4th wave happen, the 5th wave will happen, then there will be ranging market here. So there will be a ranging for a while before the next. So you see the ranging. So the market is ranging. Now, what usually happen at the turning point here, this is the point after the first 1, 2, 3, 4, 5 of the take this stick out. After 1, 2, 3, 4, 5 of the first Elliott wave, you observe the ABC or the ICTs. Okay, if this is 5, then this is A, this is B, this is C, then it could easily have, you now begin to look for patterns that would actually take you out to the next direction. Here we saw a momentum. Here it broke back. What does it tell us? Is it a strong one? We don't know. This type of analysis you do, or you place your flag pattern here, as I said, which I just removed. If I place a flag pattern here, or channel, where's the channel? If I place a channel here, that after reaching this, I had this channel, right? Started from here. What happened? We saw a break of the channel here. So there is a break of channel through a momentum candle. Then in that case, I can draw a small box around that. Where is it? Where is my tool? I can draw a small box around this to actually make it a new demand, a new supply zone, which likely, and to make that a supply zone, we wait for a retest, right? A retest of it, and once it retests, we check for entry to be able to sell. Otherwise, if it breaks it, then we know that this was a fake breakout. Yeah. No, it's resistant. That's 200 moving average. It's still consolidating around the 50 moving average. So it's risky. You don't waste your money here. There is a breakout here. Is it fake or true breakout? It is fake. It returned back here. It came back here, support. So a lot of range. Then this is actually a breakout. Wait for retest. No, it breaks it again. So instead of retesting here, it breaks it again. Now I have a retest here. Stop. I have a retest here. With this retest, what I need to look for is to look for the next region. This is the next closest region for that, because the what is it called? Immediately this retest happened. If I had before I use this this retest as analysis, okay, what happened here is that here, after I set this region is 2006. If you check by the side, you see 2004, 2001. This region here is region 2005. What you do is that if you see this plus sign here at 2005, if you click it on trading view, it could I draw a horizontal line there. Okay, that horizontal line, I can double click, not double click it. On the horizontal line, I can actually set an alert. Where is my bell? So this is the alert button. If I click on this alert are not currently available in replay mode. Sorry, because I'm in replay mode. Once I finish the replay, I will use this as an example for you. So what happened is, here you will go to an alert, set alert that when this market comes back to touch this 2005, you should draw your attention. Immediately it does that, it send you email, it send you a text message, whichever form. It can ring a bell on your desktop. Then you know that, hey, it's time for me to go look at the chart again. You don't need to sit watching the chart all day. That alert tool works magic. Okay, so here I come back here, immediately I go down to 4 hours time frame to look at if there are entry conditions. Entry conditions satisfied, we will place a sell. Your next take profit will be this region of another momentum. Okay, that when it touches this region, which usually actually happened here, it touches it here, then that's it. So again, it came back, it breaks it, came back again, it's still above. Now this is another interesting one. So I think this will take us to the end of the replay. Yes, the replay has ended, and now we are here. With everything, let's take a break so that when we come back after the break, we sum together and use everything we have discussed, learned so far, to actually analyze what are the potential direction of next week. As from next week, what we should be looking out for. Before the break, again, please, if you have not subscribed to our channel, hit the subscribe button now, and then like this video. Your comments are welcome in the comment section for us to improve on the videos, or also, just as we have done today, looking at today we're looking at the price actions. If there are topics you want us to discuss, also make sure you put it in the comment section. So while waiting, when we come back from this break, we are going to analyze the current chart as it is. This, if you look at the date here, this is Friday 19th January, which is yesterday, the last candle from yesterday trade. So we will analyze now based on everything we have learned, bring everything together, and then determine where we should look out for next. Thank you. Yeah, welcome back. So now to the concluding part of this. Remember, towards the end of that, before the break, I made mention of the use of alerts, setting alerts to tell us where to come back to look at the chart. So this is where it is set. You put it, it tells you on which condition, that is which condition you want to set the alert. Is it on the EMA? Is it on RSI? Is it on the price chart itself? For example, in this case, I want to set it on the price chart. And what type of alert do I want to set? Is it crossing each time it crosses a particular price? Is it when it crosses the price up, or when it crosses it down, if it's greater than a value, whatever it is, moving up or moving down? So these are different conditions that you can set. You can also set when it's entering a channel, especially when we design the demand and supply zone. So we could say that, okay, when it's entering this channel, it should signal us, or when it's exiting the channel, or when it's within the channel or outside the channel, whichever type of condition you would want to set. So in this case, let me say, because I strongly want you to get used to use of channels instead of lines, let me say when it's entering a channel. So what is the upper bound of that channel? You will have to indicate. What is the lower bound of the channel? You have to indicate. Okay, then is it once or every time? If it's every time, you set it to every time. You can also set when do you think that your channel is valid for. Is it valid for just that day trade? Are you looking at it that, okay, within today, when it enters that channel, you might have done your analysis on a 1 hour time frame or on a daily time frame, and you say, okay, within today you are expecting price movement towards certain direction. So you set that expiration date and time when this alert will stop coming. Otherwise, it will continually come to happen. Then you give it a name. Maybe you can rename this. These are previous alerts I have set on this platform: sell alert, buy alert, RSI buy gold now, and so on and so forth. So you can name it whatever you want. It's an editable text. Then the type of message you want to see, because you might have set several alerts on different currency pairs, so it should tell you exactly which of the currency pairs you want you to look at. In this case, you could say is the GBP USD that it. So whatever it is that you have set the alert on, it could also be a news. You know the time for a news that, okay, you said if this news happen and the market goes this direction, then you set the date and time exactly here. Then you say create an alert. I will not create alert here. Immediately you hit create an alert, it has your notification system. You want a notification on the app, that is this app itself. You hear the alarm ringing, show a pop-up message, send me an email, play a sound, the type of sound you specify it here, how long you want the sound to play for, or send me an email to SMS, and so on. Just hit the create alert. So that will give you the alert. That is the bonus I said I would share. Now, let's analyze and see what is the market currently doing. Remember, we use trend, we trade trends. That is the easiest way to trade the market. Follow the trend. Let me take this out. Follow the trend. If you follow the trend, you are always likely to win. Now, if I look on the weekly time frame, it is above the 50. It is above the 200 moving average. It's an uptrend. It's above the 50 as well. Still in the uptrend is still very strong. Then I step down to the daily time frame. And the daily time frame is the same. It's above the 50 moving average. In fact, it's at a very strategic point where it's touching the 50 moving average line again. So what do we have here? Do we have a buy? Do we have a sell? That's another decision point here. Okay. So first of all, it breaks it retested, it went up, it came down. What is spectacular here is that if I check this was a downtrend, right? Lower low, lower high, lower low, lower high, lower low, lower high, then lower low. Instead of lower high, lower low, then you have higher high, higher low, higher high, higher low, right? Higher high. So which means there is a change of character here within this region. Okay, within this region there is a change of character, and then in that case here I would mark my first box, which is this one. I think that is the green box, right? Remember, I cleared the ones we use for the analysis so that we can have a clear chart here. This, after we do this analysis, you can take a snapshot of it, and because I'm also using the opportunity to do my trade setup now. This is also my own trade setup for the coming week. Come on, leave this for me. Yeah, as I was saying, this is my trading setup for the coming week. So I'm going to bring it all in here to see what are the opportunities. First of all, I'm in the daily time frame. I have marked my demand zone here. I have also seen a comeback to test that zone. I see that the price is above the 200 and the 50 EMA. Now, what other tool from my previous tools will I use here? There was a change of character here. So we had a run here. This likely, okay, now I have to bring my Fibonacci retracement tool in here as well. If I see the previous high and low here, let me check. Let me make a reading here. From the previous, I had okay, this is 0.38. I'm going to mark regions now. I'm doing this afresh right from start. Okay, this is the 70, this is the 100 region. It came back here, retested this region, come back here. It came to this region, retested, break this region, back here again. It's going to break this. It did break it here. Come back here, retested. It's ranging here in between here. The next immediate point is this region, 2.067. Do I have a region there? Yes, let's mark it. I have a region here. I have a supply zone here. Let's mark the supply zone. There is a supply zone. This is the last candle. Even though the momentum was not that strong, but it is worth taking note of. Okay, we make that red, right? Red. That's another zone here. So what happened? We need to pay attention to this zone. If it breaks this zone, then it's going up. Note that even though there is a very high selling pressure here, and the pressure here indicates that the pressure here indicates a selling pressure. It came back to that zone. Okay, even though it's a reaction to market news, it's only one single. So if it came back to that zone here, come down, retest this zone here. So I will leave this as an outlier I'm using, and if we check this region, is corresponding to a previous region here. We have similar region here in the very near past, using this and this. So it's a region of importance. Okay, so now it's here. I'll delete this. I don't need this one. I only use it to check. So here I'm back into this region. It came out, it retested this region here. It's coming down. So I wouldn't rush to enter a market here, because this could be a start of a downward trend. You know, if you look from here, higher high, higher low, higher high, higher low, higher high, then higher high, this could be higher low. Then I need another higher high here, which is 1. And if this is a return, so let's put something here. What we are saying is, if this is higher high, higher low, higher high, higher low, higher high, yes, higher low, this qualifies to be a higher low because it's below. Oh, okay. Then there is potential break of structure. Potential break of structure, even though this is like this now. So what we're expecting is either it comes like this, it comes like this into this region, which is 1. This is 1. It could come into that region, or it could rebounds from this zone which it has initiated, or we could have, where is the chart tool, or from here it could actually come to break through this region up, break it, retest, then go. So this would go with green. Let's make this green. Let's make it thicker. This is a potential move. Okay, so this is a potential move. Let me reduce the size, the font of these ones. Oh my God. Okay. 10. Just want to keep the values on the screen, our informations on the screen. Wow, what to do? Okay, this is also 10. This is also a 10. Okay, just want to keep these values on the screen. Okay, we are good to go now. Okay, so now we are in the daily time frame. Let's go to look at the 4 hours time frame. Let me lock this. This potentially is something we'll come back to see. We'll come back to review in the future how this trade, this live trade has played out eventually for us. Okay, this is locked already. I will also lock this so that whatever I do would not move them. Okay, good. So here, as I said, I will go to the 4 hours time frame to look for a perfect entry. Now, in the 4 hours time frame, what are we seeing? In the 4 hours time frame, there is no clear entry here because I am seeing the price is still below this, which is a sell. If I use this momentum here, we have one here, we have one here, 1 2 3, 1 2 3 4 5. So here, if I call this a smaller one here, is there a retest? Yes, there was a retest here. Then it's completed. we have another one here. There is no retest of this zone now, so which means probably from here we could have a retest of this region first. We could have a retest of this region first. We could have a retest of this region. This is another, yes, we could have a, oh my god, where are you? Okay, let's start again. Maybe I deleted it mistakenly. I wanted to lock it. I think, okay, I mistakenly deleted. So we could have a retest of this region. I didn't see a clear entry here, a clear buy entry here. Okay, now retesting this region, there are two possibilities. So as I said, I'm combining everything we have talked about to see, to mark out what is possible in the market. Let's adjust these ones to the right shape. This is what we had. This one is here, and the last one is here. All right, so we are potentially looking at a lower turn of that. This started from here. This one, because I said it's more like an outlier, I would leave it here. Okay, yes, and this aligns here. So for the other one, why did I place this before? Okay, it was a region. Yes, there is another region here. There is a trend. This is a trend line connecting here, which was this. There was a test of this region, test, then eventually it broke it. So I'm looking at this point. This is another confluence point, which is of interest because it's around the Fibonacci retracement level here. Is this a rebound? When it breaks it here, is this going to be a rebound? Do I have a clear entry here? Yes, I do. I have a clear entry here. So which means there is possibility this comes back again into this region and then it goes up. So if it's going to go up, what is likely to be my take profit? My take profit will be, first of all, the first landing is here, right? This region. So in this case, my first take profit would be around 2070. So what I would do here now, from what I'm seeing, is I would wait for market, let's say Monday or Tuesday, to play around this region to give me value, a clear entry value around this region, where I can take my trade. So I will place, sorry, let me lock this back. I want to lock it. I want us to reference it we'll use it to study next. Okay, if I'm also looking at this base here, this was broken down. It broke it here. A lot of confluence here is below this. So what I will say is, let me take this out. If I will use our rules, remember I said we have to follow our rules clearly. We need this price that is still within, and there is more like a touching in the 4 hours time frame. The 50 and 200 is touching here. It's more like indecision. We need to clearly see that the chart is above the 50 EMA. Remember, there is a news here. There's an upcoming news. Go back. Let's look at, there are two possible news for next week. This is consumer sentiment Oh no, this is the previous one that happened yesterday. So GDP growth, quarter on quarters, so and durable goods order month on month. So these are high impact news, especially this GDP. So the GDP news coming on the 25th of January would be that, okay, this might still rally more. There will be rally around this area. If it's favorable, then we could see this move up again, because if the dollar is stronger, then if the dollar is stronger against that, if the GDP is positive, it shows that the dollar index is doing well, then this potentially would begin to still go down, which means we'll see a crossing of this downward. Otherwise it will bounce upward. So we would hold our breath. What I would likely do is that I will allow the Monday trade to come in and close, because also it could be that this is forming another momentum, which means this will temporarily come back to this region for a retest, then we see boom. So which means this is not closed, this is not here yet. It might either come to this region. Okay, then we have it. This is the right chart. So for now, I'm not in a hurry. I'm not entering any trade, but these are the potential direction. If it breaks this region up here, then we would look for a retest. So I would enter a market here. I will enter a buy here. Let me place. Okay, yes, I will enter a buy here. I will go back to do the calculation. I will enter a buy here if it picks this. But if it breaks it, if it comes back here and I see an entry position within coming downward, I would enter a sell here, and my take profit target will be this region. Take profit target, no, this is the momentum here. So my take profit target would be this region. So this is the two. The first one is here. There is one here because we have an engulfing here. So there is one here. Being on this playing safe, let me take this out. Take this out. So to play safe, okay, to play safe, I will use this one as my next take profit if that market happen. Yeah, this one. So this will be my first take profit lock. If it breaks, meaning if I see a return here, it's going to break this and it's coming down here. So this should, after consolidation, this is the next major place of stop. Okay, remember I took this, I kept this in the, okay, what is better is to hide it, to let it be in the 4-hour time frame only. If I do visibility here within this and below, so it's not going to disturb our setup in the daily time frame. So in the daily time frame, this is my target zone. Okay, so this is my setup, and as I said, I will not take this trade from this place. I will be watching the 4 hours time frame, and I will also wait for momentum, good momentum. I would not just, because I don't need to force this trade. This region is a region of consolidation. It's on the 50 EMA, so be careful. 50 EMA, then on a very on 0.23 Fibonacci retracement level. Note that this we have, in this case I could classify this as double top because it has come to this region twice. So if it's a double top, what I expect is that it should break this neckline. If it breaks this neckline, the next target is the 0.5 region, and it breaks this. If we have good trade, then it goes below to after 0.55, it will range, then either it continue its journey, which means we have, that's the beginning of a new trend. Okay, this is let me see if there is anything in my rules I have not touched base here. Entry, exit, this will be determined on likely Tuesday. I need to see clear direction on Monday. Okay, and Tuesday usually the market is usually busy. Don't force the market. I'm not forcing the market. I'm not seeing a clear entry here now, so I'm not making any market decision. Although I have put potential directions on the screen, I would stick to my strategy definitely. So here, what I have not applied here is yes, I have plotted my support and resistance level. What is missing? The Fibonacci. Yeah, if I have to look at the Fibonacci retracement level, which is what I said the target here, if it rebounds here, where I'm going to take next. What my Elliott wave is telling me here is that I should target, let's measure it together, what I need to target there. If it breaks that region, here I measure from here to here. 197.254. So if I do that calculation, where's my calculator? 197.254. I'm not seeing my calculator. Oh my god. Yeah, let me look for calculator here. Okay, I will pause this. And get my calculator, please. 1 second. Yes, I got my calculator. So 197.254 multiplied by 1.618 would give me 319.15. Okay, 319.15, which means I would calculate from here, from this place. I will move 319.15 as my next target after it beats this region. 319.15. Let's see if the screen, if I can measure it on the screen. Otherwise, I would calculate the value and then set it. So 319.15, 319. So from here, let's calculate 319. It's not going to, I only got to 259 here. So the other way to do it is to add it up, which means from here I'm at 1931 plus 319 plus 319.15 plus 1931.087. 1931.087. So this is me 2250. 2250. Interesting. If I see an entry, a buy entry from here, the target will be 2250. So the next zone after this will be 2250. Let me place this and lock it. Place it and lock it. 2250. 2250. Let's see. From here, 2250 from here would be what? I just want to. I'm not able to see it. I'm not able to see it. I wish I could. Okay, yes, let me go to the weekly time frame, whether I can see it there. It's not here. 2250. Yes, I'll be able to see it. Go back here. The visibility for this is what? Visibility. visibility to all intervals. Let me put it on all intervals so that I can adjust it here to 2250. It's not going to. Yes, exactly. I can see it now. 2250 exactly. So this is the next target. Interesting. That's a new record, new high, right? Unlock this, so meaning it will go somewhere here. This is not a one-day journey, but also events can make it a one-day event, a one-day journey, but this is the potential move. Okay, this is a potential move only if it breaks and retests this. So that market entry is from here. We have to extend it also. Extend it. Then in this case, even the next Fibonacci level here is here, so I have to shorten that stop loss. Then so this setup is usually for swing traders. Lock it. I lock it here because it's an interesting one. In case it breaks this, if it truly breaks this and retest, then this is a massive one here. Okay, first of all, this region, if you had entered here, your take profit is taken here already. Now, if you enter a sell here, if you enter, for example, if you had entered a sell here, if you have a sell market here, it's in this region, you can take this as your first take profit, because yeah, your first take profit. Yeah, then you target in here. Okay, you tighten your stop loss from here, so you can move your stop loss to this rebounds level, because there is possibility that this rebounces back here but not going beyond. So if it rebounces back here and is going down, meaning when you see from here, I'll look for an engulfing sell here to target this region, to target the 1960 region, if there is potentially this zone, right? That's 1932 region. Okay, so I wouldn't take much more of our time. What I would suggest is screenshot this and keep. We will use this analysis. We will come back to this maybe in the future, when the market direction eventually fulfill one of these after the consolidation. But what is clear here, that we are still in uptrend. The green is likely because we are still in uptrend. Everything is still above this. There is currently a consolidation which will not make us place market. But if you have an open buy, if you had entered the market from here with this stop loss at this level, you can adjust your stop loss up a little. It's not unlock. You can adjust and bring your stop loss close to this region. If I move this, it will move our chart. So let me leave it here. I don't want it to move it from the 250 zone. We have 2250 we have set. Okay, so this is risk to reward ratio is super high. It's a crazy one, but trust me, this market is going to if it breaks this and retest without breaking down, if we might have a fake breakout here. If we do, then we see the reversal. That means this becomes the neckline. We'll target here. Otherwise, if this rebounces here, watch it next week, possibly. I don't know. This is yes, there is possibility that by the end of next week trade, this will form. I would start next week's session from this analysis. So I'm going to screenshot this also and keep, and let's see how the trade plays out. So along the week, you can put this chart setup on your test environment. So what again would happen is that, remember, this is on the higher time frame, which we confirm entry from the 4 hours time frame. You can also do a similar setup, follow the same guideline, place a similar setup on the lower time frame. Go to 1 hour. Go to your 1 hour chart and analyze the 1 hour chart. If you see from here, this is top down, right? Ignore the lines you're seeing here. This is from our higher time frame setup. This is top down. Is there a reversal here? Lower low, lower high, lower low, lower high. This is not lower low again because it's not belong this. The trend has been broken. So you have higher high, higher low, higher high, higher low, higher high, higher low. So check. So use exactly the same rules we have defined. Now you see the chart is above the 50. There was a retest on the 50 where the 50 EMA now forms the resistance zone. Then it's going towards the 200. Again, this is not the 200 EMA, did not, it breaks the 200 EMA here. It breaks it down again. Is it going to, is consolidating? Is it going to break it up again one more time? What you can look out for here is that it's, if you get momentum candles, if you get momentum candles within this region, it breaks it and retest, then the up has started. So if you have the time, to be on the screen to watch out, first what you need to do is look at those key areas where the market players comes in. You mark this region, you mark this region, you mark this region. Then the reversal here, the momentum is not that strong. We don't have a very strong momentum here, no strong momentum here. But notwithstanding, you look for zones here as well to mark. Okay, mark this place. Yeah, we have one here. Mark this again. So because if you mark here, for example, I'm not going to mark anything here. If you mark this region here, then which means you will watch out for this to retest that region, and if it start going up, you follow the market. So this is how you do it. This is 1 hour. Then if you do the setup, if you mark your zones out in the 1 hour, you step down to 15, not the 45. Step down to 15 to take your scalping. You call it scalping, your short trades. Okay, good. Thank you, and please expecting your comments in the comment section. Tell us what you feel, what you want for the further clarification on, and your questions will be answered. Thanks to those that suggested this price action trading. If let us know what you want us to look at next time in our upcoming videos. Thank you. Bye bye. Don't forget to subscribe to our channels and then like the videos. Bye.